6 years ago, a crack investment team left a large fund to start a new type of fund. This team promptly escaped the usual trappings of Wall Street and went into the investing underground. Today, they are still wanted by the government and surviving as investors of fortunes. If you have a problem, and when you see a stock dip massively, maybe you can hire the ARC team. Well, what is going on, guys? Luke here today, and I want to talk about a stock that just had a massive dip. So, ARK Invest decided to pour huge money into this stock. So it looks like my on again, off again, rumored crush has once again been buying stocks that the market is completely shunning. But this stock just had a monster sell-off, so the question really becomes, is it a great opportunity? Or are you trying to catch a falling knife? I really think you're going to like what I got for you here today, and all I ask in return is just that you gently tap the like button and subscribe if you haven't done so, because both are free and easy. Oh, wait, that sounded terrible, but it may be par for the course today. So this stock just crashed after its earnings report was revealed. The stock immediately cratered 25%, and it has traded pretty much flat since then. Wall Street expected revenues to be around $613 million, but they only hit $559 million, so that is a huge miss. And their guidance for fourth quarter revenue was $650 to $700 million, which again was short of the expectations from Wall Street of $777 million. So that is another massive strike against them. And I guess it would help if I actually told you the stock. And that stock would be Splunk. See, I told you it was going to be a little off today. Now, I won't waste 10 minutes telling you what they do like other channels do to get more ad revenue. But just briefly here, Splunk is a cloud data company who does all types of computer things involving the cloud, to include analytics and security and a variety of other computer related things. Their clients include Coke, Hyatt Hotels, Intel, and a host of others. So this isn't just a small operation who only provides these services to small businesses. They work with massive companies. See? Short, sweet, and likable. Looking at the positives from their earnings call, they still grew revenues from last quarter and have been trending up for the year, so it's not like they suddenly were not growing or falling off a cliff revenue-wise. Long story short with all this, they missed expectations and revised expectations down, and that's a double whammy that Wall Street absolutely hates to see, and the stock was punished for it. So is it a great opportunity, or are you trying to catch a falling knife? Actually, there's a great opportunity to get 4 free stocks from Webull if you deposit $100. But that doesn't answer the question that you guys just posed. I'm sorry, but it's just a good deal. The real answer to the question I just posed depends on a number of factors, but really boils down to how you answer this one question. Is this just a short-term issue and revenues will pick up in the long run as the pandemic winds down, like Splunk put out in their guidance? Or is this signaling something much larger and a long-term issue that is not easily solved? The good news is, one company has made it clear what they think. ARK obviously views this as a short-term issue, and they are clearly taking advantage of a monster dip in the share price to get some shares on the cheap. Actually, they started plowing money into it almost immediately upon the stock cratering. So clearly they saw some opportunity and just pounced. They have done this many times before with many other stocks, from Fastly to Tesla. Every time there is a major dip in a stock they are targeting, they just pounce. But does that mean it's right for you and you should just add a bunch of shares today? Now slow down before you go all in every time ARK buys a dip. I do want to point out 3 keys you must absolutely completely understand before making a bet on this stock. On the surface, this seems really easy. But remember, ARK is a fund, so it's not as clear cut as you may think. But these 3 keys will help you get the right answer for you. So the first key you must understand, there may be way more pain ahead. The facts are Splunk was richly valued before this miss and adjustment in guidance. It would not surprise me at all to see a lot of consolidation and even some more drops from its current price. Now on the flip side of all this, ARK clearly views this as an opportunity to increase their position. So if you're bullish on the stock, this may be a good place to add some more shares and start a position. The second key, you must have the proper time horizon with this stock. And I could not tell you how many times I see people say they are long-term investors, then they do the exact opposite and essentially day trade or swing trade their stocks. And then they justify their moves by pointing at ARK getting in and out of positions. ARK typically does that with a very small position of each stock they own. When they take profits on Tesla, for example, they don't dump all their shares of Tesla and then wait until Tesla dips and then pour all their money back in. They simply sell a small percentage when it makes sense and buy a small percentage when it makes sense as necessary to meet their goals with the fund. They are an ETF that has to maintain certain percentages within their portfolio. So ARK's timeline on Splunk is a long position, meaning they plan to hold for years. If you have that same time horizon, any short-term pain over the next few months will just simply mean opportunity to add more and lower your cost basis. And the final key to successfully owning this stock? You probably guessed it already, it's having a plan. As we have discussed many times before, if you do not have a plan for every scenario, you will trade on emotions and that will destroy your investments, and that fact is exactly why I made planning such a huge part of my course, which is still on sale for a little while longer if you're interested. But I know from experience that if you have no plan, you have no clue what you are really doing. I mean, what is your planned entry price point for this stock? Where do you have the stock price going in 1 year, 2 years, 3 years from now based on your research into their growth? If it runs up huge, are you going to sell and lock in profits? And if so, what price would you do that at specifically, and how much of the stock would you do that with? What if you sell and Splunk goes up more? Then will you have FOMO and try to rush back into the stock? Having a plan means you are ready, and every scenario is a win-win for you. You make money no matter what happens. But you cannot do that without a plan. And I love it when a plan comes together.